Hey guys, welcome back to my channel. My name is Joe. Today is February the 20th. Market is closed. I wanted to talk a little bit about Thunderbridge. It's a SPAC, ticker symbol THBR, and I wanted to touch base on why I think this company, with the merger that's coming up, in the next month or so, is going to have a tremendous growth as well as prospects in this space. And if you don't know much about SPAC, those are special acquisition companies, kind of like blank checks. It's just a route for companies to go public, instead of going through the IPO process. It's just a simpler way, and it's very hot right now. It started last year, for those who don't know. So a quick reminder, please subscribe to the channel. We're growing very fast. Give this video a thumbs up. Give it a like for the YouTube algorithm so that we can even grow faster. We have big plans for you for this channel. Thank you so much for the support you guys have shown. Let me know in the comment section what you think about this company. If you have any shares you planning to purchase, or if you have. So let's discuss. So right now the price is at 11.40. As of Friday, it was down by about 1.05%. After hours, it's up by about 1.06%. For the week, it's down by 5.39%. For the month, it's down by about 14.72%. 3 months, it's up by about 12.29%. And for the year, it's up by about 13.1%. So let me show you my position. So currently I have 400 shares at an average cost of $10.63. I have a total return of about 7%. Very, very small, relative to, if I just took that money and went to a play that I know would hit like 100%. But I like also trying to diversify. It's always good to see your plays going way high, but I'd rather have a few plays going high than taking a lot of my money and putting in just one play. It's just too risky. Of course, it comes with a big reward, but I'd rather just spread myself all over the place at the moment, because this is just for learning purposes and kind of showing people how I invest and kind of teaching people, but more of my serious investments and like in Fidelity and my other brokerages. So always make sure that you don't just listen to whatever somebody online says. A quick reminder, this is just for entertainment purposes only. Let's talk a little bit about the stats, and then I'll go over what company they're merging with. If you've heard of Indie Semiconductor, that's the company they're merging with, and I'll talk a little bit about it, give my pros and cons, and provide some guidance. So currently you can see they have a market cap of 502 million, and I think after the merger they should be over 1 billion, but I will check those numbers when we're going through Indie Semiconductor details. And the volume as of Friday was 1.67. They have a 52-week high of 1494, so you can see there's some potential, even though we are retracing back and the market was pretty much red most of last week. We have a support that we can attain, in my opinion. So I actually had 410 shares, I think. So I took some money. I sold the 10 shares because I needed to do an option play a while back. So I can show you when I started buying it. That was December 17th. Then you can see I sold the 10 shares on February 1st, and I wanted just free some cash. That's why I did that. So let's go over here. There's this article which came out the time when I started buying it, and I went through and dug and did my own due diligence. It's a little bit old but very relatable, so I wanted to talk a little bit about the highlights. So in Indie Semiconductor SPAC, what investors should know about the autonomous vehicle play. So I think it's good to kind of know what the company is dealing with. If you believe in the company, then you can now take your hard-earned money and invest. So right now, let's read. A leading pure play provider of semiconductor and software solutions for automotive companies is going public via a special purpose acquisition deal. The SPAC deal, Indie Semiconductor, is going public via ThunderBridge, now the one we've just seen in Robinhood. The deal values the company at an enterprise value of around 1 billion. So like I said, you can see in Robinhood currently we had it at half this valuation, so you can already see the prospects. If they just merge, that will be like 2x. So for me, that's kind of my thinking. Since it's a SPAC and you can't really rely on a lot of factors, so for the most part you have to rely on the company they're merging with, check their financials, check the competitors, and we'll talk a little bit about the competitors, because your competitors in your space should kind of guide you on your pricing, because for the most part most people will price you based upon how your competitors are. So shares of the company rose by about 23%, and that was in December 16th, so a while back. So what does Indie Semiconductor do? Indie is helping automotive companies with autonomous connectivity, user experience, and vehicle electrification. The company said it has unparalleled semiconductor and software integration with an efficient design process. At the same time, you should check their website, which we'll just look at that shortly, and you will see it's very futuristic. It looks like a pipe dream, but very attainable in my opinion, because nothing now is unattainable. If you've been in this space for a while, you know that. Indie has deals in place with 12 tier 1 approved vendors, including Magna International, MGA, and APTIV. The company has already shipped more than 100 million devices, and they said it is increasing its OEM penetration and content per vehicle. So if you're working together with OEMs like Toyota, Volkswagen, BMW, Chrysler, Mercedes, you have a big opportunity to do the integrations based on the products you serve, because people will still buy cars, and most people are going through the electrification route, and you never know if Tesla will be also among one of the customers for them, because they're in that space. Something to remember as a risk for this company is there's a big shortage of semiconductors currently, and this might affect this company in the long run unless they have the capability of producing a lot of them and being like a leader in the space. So let's talk about the competitors. So the company has already shipped more than 100 million, and Indie lists Silicon Laboratories and Umbrella Inc., AMBA, as competitors. So right now I think Silicon Laboratories is more than $150 a share. I haven't checked the share for AMBA, but I can check that and let you know. I think it's about 120 something, probably 125. You can correct me if I'm wrong in the comment section, but you can see they are in the 120 150 range right now. So that's kind of telling me that if Indie goes through with the merger, then the price will be very favorable. So that's why I put a sizable chunk of money based on those factors. And then you can read the financials as a backlog of 2 billion in deals and a pipe dream of 2.5 billion in possible opportunities. Revenue is estimated at 23 million for fiscal year 2020. Revenue is expected to ramp up beginning in 2023, which estimates of 204 million and 349 million and 501 million respectively for years 2023 to 2025. From 2020 to 2025, Indie sees revenue growing at a compound annual growth rate of 85%. Over 60% of aggregate revenue through 2025 is already shipping or one stage of the company. So I think they're also projecting the growth of EVs, so which kind of makes sense if you're in that vertical. And let's talk about the growth. The deal is expected to fund pent-up demand for additional programs, according to the company. Indie said its target market is 16 billion and will grow to 38 billion by 2025. Strong demand for silicon and software inside automobiles is set to help in this growth. Today's vehicles have around $310 in silicon content per vehicle. In the future, that total could rise to more than 4,000 per vehicle. So there is a lot of demand, if you ask me. And then the last part I wanted to show you was, their website, and it's right there. Indie is merging with ThunderBridge acquisition. And then the other important thing is the solutions that they offer. I think it's kind of good to know they have the ADAS autonomous system, for autonomous driving. Then they have connectivity, so connect to the systems of the vehicle. And then they have the user experience, if it's about the vehicle driving itself in autonomous driving, it will show on the screen, and have the LiDAR capabilities and cameras doing the machine learning in the background and just portraying it in a way for humans to see, and also electrification. So they in those segments, and I think there's a future. Let me know what you think about this company, and I'm happy to give updates as soon as we have new news. Of course, it's a risk, and high risk, high reward situation. That's why I bought in a little bit early. I would have gone that route like I mentioned, but I still believe in this company, and I rather take this risk right now. I'm also planning to provide some new SPAC plays, and also talk about some penny stocks, because most people are asking about penny stocks, because I think that they want to grow their accounts. And I'll be revealing my portfolio soon in Robinhood, and I think we'll have a really interesting time growing that portfolio together. We'll be discussing on strategies and long-term holds. Just quick reminder, don't sell when it's a red day. Just hold, learn patience, be perseverance, be green, be safe. Thank you so much. See you on the next one.